Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're discussing the impact of today's Fed decision to raise rates by 25 basis points and how it affects everything from housing to your pocketbook. Now, Brian, one thing that remains obvious is that inflation is a prominent concern. It's elevated and it's nowhere near the Fed's 2% goal. Job gains have picked up in recent months and are now running at a robust pace, and unemployment rate continues to remain low. Also, in the Fed's statement, we saw language of additional policy firming. So, what do you make of the Fed's decision today and what Powell said at his press conference?
Yeah, there was a lot in this today, a lot of moving parts. 25 basis point rate hike was exactly what the market anticipated, and that's a good thing.
Right.
Okay. Here's my thought on it. Jerome Powell was stuck in a catch-22 here. Okay. If he raised interest rates too much, the market would take it as he's doing too much, and we may see more banks break.
Right.
That was the big issue. Also, if he pauses or even lowers rates, the market would be saying, whoa, wait a second, the Fed has some more inside information about the recent events, and more banks may fail.
Yeah.
And I think he did exactly what he should have done, 25 basis points hike. And the market seemed to like it at the initial, pulled back before the press conference, and we actually turned negative across the board with everything, including interest rates, which is
okay. So let's stay with this banking thing here, because this was a big
Mhm.
part of the press conference, and rightfully so. Do you think that so you think that the pausing of the rates would have signaled that the Fed is not as confident in the banking system? Like they had some sort of insider information it would have told us that things aren't as stable as, because one thing that he said quite a few times I picked up on is how the banking system is sound and resilient. And those are his words, not mine.
Yeah, no, he mentioned that multiple times. And you're right. If he would have paused here, I don't think he could have paused and said that language today. Okay. They're very firm of where they are. They would not have raised rates if they thought that the banking was more fragile than what it is. Okay. And let's take it one step further. You know, we've been hiking interest rates for a year now, right? Yeah. Okay. But what else have we been doing? We've been buying back all the bonds that were sold during the financial crisis.
Right.
That is another level of tightening. Okay. And Michelle, when we look at that, he made a statement that is still continuing. If that's still continuing, there was actually like a double hike today. You had a 25 basis points, and then they're still buying their bonds back. So that's, to me, honestly, they did exactly what they should be doing, because the number one concern is fighting inflation. And if we look at inflation, how many millions of consumers does inflation affect more than one or two banks failing?
Sure. Okay. All right. So speaking of tightening, do you think that the Fed has much more to go? How much are we going to see the Fed tighten from here, especially considering this lag effect on inflation that we're seeing?
Okay. They have said that one more 25 basis point hike would meet their December 23 target, right?
Right.
Now, one thing I caught in here is they're not saying higher for longer like they were a month ago.
Sure.
But they're saying additionals may be necessary. And this is quite different from last month. So that's a huge change in sentiment of them.
Okay. Real quick, I just have one more banking question, then we can move on to how this impacts us, credit tightening, all that stuff. We saw Silicon Valley Bank collapse due to interest rates driving 10-year treasury notes into the crapper, so to speak. So how does this decision affect banks, specifically their balance sheets, and more importantly, ensure that banks are sound and we won't have another bank failure coming in the next few weeks? Will it add more stress to the banking system? I know it's only 25 basis points, but what I'm learning is a tiny little fourth of a point can move the needle pretty far.
Yeah, but in all honesty, that 25 basis points, I'm sitting there watching the Treasury market right now, and excuse me for turning around and making sure rates are lower right now across the board with 10 years, 5 and 2s right now compared to where they were before the hike was announced.
And why is that?
Because in all honesty, it's almost like, and we've talked about this in some of our other videos, we feel that the Fed's nearing the end of their tightening cycle. Okay. Remember we did a video talking about the MIGA rates. We might start seeing fire sales on MIGA rates.
Sure.
Well, we believe that the rates have peaked. And if they start to peak, that in turn by itself, Michelle, will help the banks on being underwater of them long-term treasuries. Remember, they're not underwater if they held them to maturity.
Absolutely. Right. Sure. It's only if they have to sell.
Only if they have to sell.
So when you say we, are you talking about the royal we, or are you talking about the markets? Because you said we think, talking about the treasuries and rates.
Let's go back to me think. How's that?
Okay. Me think.
Yeah.
Okay.
Yeah.
Well,
and just by looking at the history of rates and history of financial crisis and that kind of stuff, watching rates go up and nearing the end of the tightening cycle, you'll start to see. Remember, the markets front run everything.
Right. Of course.
Like we had a nice rally for the past off of the banking crisis from a week ago. We had a massive rally in Bitcoin. We had a massive rally in the NASDAQ leading up to this. And usually you would see, okay, this might be a sell in a news event. But honestly, it wasn't. I mean, we pulled back a little bit from the day's high.
Sure.
But I truly believe that the market feels that the Fed is near the end of their tightening cycle.
Okay. All right.
And so they kind of said it based on the change of their sentiment. So.
Sure. Right. Right. So as of filming this, the markets have pulled back from the day highs. Let's talk about the markets, crypto and traditional markets. How do you expect them to react to the decision tomorrow? Is this is this a decision enough to calm fears, or is this, as you said, it's what they expected and has it been priced in?
Well, I think it was already priced in, and the market knew that 25 basis points was there. And it was exactly what they thought. But I'm surprised we didn't see a bigger sell-off, because usually you get a sell in the news event. Now, Bitcoin is coming down a little bit right now, because this morning it was near its short-term high there, right around 29,000. And we've pulled back off of that, down about 2% right now. But the NASDAQ was up 1.5% at the high, and it's right about hovering about even right now. Can we see going forward? Yeah. Now this is, to me, we've kind of stabilized the market.
Sure.
Now let's get back to fundamentals, because no one wanted to make a move ahead of this. Everyone wanted to say, okay, we don't know where the Fed's going to go.
Right.
And I think this is a nice stabilization. I think we'll be okay here. And let's get back to fundamentals, get back to earnings, and see where this market takes us. Okay. And in all honesty, this market is still healthy.
Sure. Okay. All right. So one thing that Powell talked about a lot in the conference was tightening credit conditions. Yes. What's the bottom line here for consumers? What can we all expect?
Well, let's look at that. That's the very first thing that we thought. Okay. Right. Me thinking out loud as an advisor. When we start seeing the banking crisis, the very first thing, when interest rates were collapsing in the banks,
right?
Okay, everybody's like, "Oh yeah, great! I can go get a loan." And now I've been waiting to hit that low number. Problem is, when banks are going through a crunch like that, go back to 08, 09, no one was lending.
Right.
Okay. This ain't as bad as
right. I was going to say, but this is not 08, 09.
No, definitely not 08, 09, because you haven't heard millions of people losing their homes. But you'll see a pullback in lending. And I think I heard a report this morning talking about the auto loans.
Sure.
Interest rates were starting to go up on that, even though rates had pulled back.
Interesting.
So when banks will adjust to make sure they're getting better quality in during this time frame, you will see tighter lending requirements coming in.
And that's for cars, mortgages, even credit cards?
The board.
Across the board. Okay. All right. So with that being said, like how long does that take? How long does that take to go into effect?
The rates, well, usually when you see a 25 basis points or anytime you see a Fed rate hike, they'll raise the rates at that bank to compensate for what was just announced. Them come pretty quick, especially on adjustable rate
Right.
products.
Sure. But there's a difference between the Fed rate and the real rate.
Yes, yes.
So
But the
let's just talk
banks,
about that really quickly. Just explain
yeah,
it for
well,
viewers.
yeah, what you're going to see is you're going to see the banks adjust their margins. Remember, they're about making profits too.
Sure, of
Okay.
course.
So they're going to adjust based on the Fed first, whatever was announced. They're going to go ahead and move them at variable rates. But remember, the market is still dictating the real rates.
Sure.
Okay. And real rates as of right now are still coming down a little bit. So I think we're seeing, I truly believe we're seeing a stabilization of the interest rate market. And I think we've seen the peak interest rates that we may see. Unless inflation really ticks up, I just don't see it. I don't see it. Not with everything that just happened and what we're going to see as far as consumer demands.
Sure.
Look, if credit is tightening, demand will weaken automatically.
Sure.
And Jerome Powell had mentioned that a couple of times.
Yeah.
It's like it's going to do our job for us.
Sure. Sure.
So,
Okay, so I have a few more questions. Is there anything, I want to get to consumers before I go big picture again. What else do we as consumers, like viewers, the average people, so to speak, need to know or need to prepare for in light of what happened today?
honestly, there not a lot. Honestly, where you're at right now is I see the stabilization of interest rates where we are. Even though the rates rose by 25 basis points on adjustable products, the real rates actually fell a little bit today. So I think we're seeing a bottoming out here. It's going to nice across the board, level playing field. Let's just get back to our normal
Sure.
daily items like traveling and spending and all that. Keep doing what you were doing.
Saving.
I wouldn't see no major change in sentiment with consumers by what just happened here today,
Okay.
because everything else worked in their favor.
Okay.
Oil has dropped,
Sure.
eggs have dropped, inflation is truly dropping right now. So
Yeah. Last month, the one thing that we saw in February numbers with shelter or
yeah,
housing, that was the one that was just really high.
yeah. But let's go back to that real quick. I don't think that's going to change anytime soon.
Okay.
One of the biggest things that I've seen in the space is that, and think about this. If you're a consumer watching this video, have you gotten a phone call in the last week, probably several of them, wanting to buy your property?
Yeah.
Okay. We average 3 to 5 phone calls a day right now.
Wow.
Still, that's not stopping. You know why? Because hedge funds are picking up investment properties as fast as possible and turning them into an income stream,
Right.
because rents are still rising.
Yeah. Well, that's a whole nother conversation. About
It is. And it's also
housing
going to
versus
create a shortage,
Yeah.
still a shortage in the housing market,
Right.
because we do still have a shortage. So,
Yeah. Okay. All right. One last question so we can wrap this up. Do you think the Fed is chasing a pipe dream with their 2% inflation goal?
Before today and before the banking crisis, I would have thought it all day long. They would have had to crank them rates up to
Sure.
do this. But what has happened, and it's funny because oil is still collapsing. Okay, oil is still falling. But guess what market just reopened?
What?
The Chinese market has been
right.
reopened now for 30 days now.
Yeah.
Well, oil's still falling. What does that tell you?
That it's not going to be as horrible as we thought it was.
You're exactly right. And
Yeah.
the Fed could truly hit that 2%
Okay.
inflation goal. Just inflation's fallen. And think about this. With the massive amounts of layoffs, these layoffs aren't because there's no work. Okay.
Right.
These layoffs is because we overhired during the
During the
pandemic because we
pandemic,
didn't know
right.
what we were doing.
Yeah.
Okay. We didn't know where this was going to. So now you're coming back into reality. Let's put it this way. Facebook stock went all the way down to like $80 and now it's back above 200.
Sure.
Okay. Because they announced a series of layoffs. Amazon laying off because they
Yeah,
had
their
too many.
bottom
Guess
line.
what?
Yeah.
They're not getting rid of the people in the warehouses. They're just getting rid of the extra people
Sure.
that they brought in, too many people in there. So if you're starting to see these layoffs, you're not going to be jumping from job to job to job like you was able to do in the last 12 months and get higher pays and higher benefits and all that stuff. If these big companies say, you know what, we don't need as much people anymore. So wages may start not accelerating higher, which in turn will bring down inflation even more.
And I believe Powell mentioned something like that in the conference today, that wages, the rise in wages is, I think he used the word stabilizing.
And just like I said about the interest rate stabilizing,
yeah,
everything is stabilizing right now. And it probably took a banking crisis to do it. So
okay, got it.
I'm happy. I'm happy with what he did today. Let's put it that way, because we still have to fight inflation.
Sure.
Number one concern, because it affects everybody, and even down to the lowest earners.
Sure.
In the world.
It erodes purchasing power.
It does. And it really hurts our seniors. And so I'm happy with this. Inflation can do things that other things can't. I mean, it can destroy us. So
right. All right. So here's the deal. On that note, we are going to put a video that we recently did. Really important. We've talked a lot about banking crisis and the banking system. Check out a video we did on FDI insurance, our credit unions, IRAs, trusts, and brokerage accounts covered. We're going to put that in the pinned comment below and also the description. It's a video I learned a lot. So go check that out. It's important that we know that we're covered. I at least think so. If you want, we run out and we get car insurance and we get flood insurance and you name it with our houses. This is make sure that your money's protected. All right, Brian, anything else you want to add before we wrap this up?
It's going to be okay.
Yeah. Breathe.
Everything's going to work out. Let's just keep going forward, live your life, stay off the news, but make sure you still subscribe to this channel though, because we're in front of the news for you. How's that?
Absolutely. Yeah. And don't forget to like, if you like this video, share it with people that you know. And as Brian said, don't forget to subscribe. All right. Thanks, Brian, so much for this great conversation. Everyone. And thanks everyone who watched.
Thanks everyone. Have a great day.